Welcome to the My Bullions podcast. Here's a detailed summary of the U.S. employment situation for July 2024. The U.S. labor market experienced a significant shift in July 2024 as the unemployment rate increased to 4.3%, marking its highest level since October 2021. This rise was accompanied by a modest addition of 114,000 non-farm payroll jobs, as reported by the U.S. Bureau of Labor Statistics, BLS. This job growth was notably below the Dow Jones estimate of 185,000 and the revised June figure of 179,000. Sectoral employment trends. Despite the overall slowdown in job growth, certain sectors continued to show resilience. Healthcare, construction, and transportation and warehousing sectors maintained their upward employment trends. In contrast, the information sector faced job losses, highlighting a sector-specific divergence in employment dynamics. Wage growth and inflation. Average hourly earnings, a critical measure of wage inflation, rose by 0.2% in July and 3.6% over the past year. These increases were slightly below forecasts of 0.3% monthly and 3.7% annual growth, indicating a potential easing in wage pressure. This wage data is closely monitored by economists and policymakers as it plays a crucial role in assessing inflationary trends and guiding monetary policy decisions. Market reactions. The labor market report had an immediate impact on financial markets. Stock market futures declined further in response to the data, reflecting investor concerns about the slowing job growth and rising unemployment rate. Additionally, Treasury yields moved lower as the bond market reacted to the softer-than-expected employment figures. Pentagon strategic moves. In geopolitical news, the Pentagon announced the deployment of additional military assets to the Middle East. This decision comes amid heightened tensions between Israel and Iran, with the latter threatening retaliation for the assassinations of Hamas and Hezbollah leaders. The deployment includes ships, fighter planes, and ballistic missile defense vessels aimed at bolstering U.S. presence and ensuring maritime stability and security in the region. Central bank gold statistics. On a different note, central banks continued their gold acquisition trend, with net purchases amounting to 12 tons in June 2024. This activity was predominantly driven by emerging market central banks, such as those of Uzbekistan and India, which added 9 tons each to their reserves. Conversely, the Monetary Authority of Singapore was the largest seller, offloading 12 tons during the month. Overall, the buying strength persists in 2024, albeit at a moderated pace compared to the previous year. Conclusion. The U.S. employment situation in July 2024 reflects a complex economic environment characterized by slowing job growth, rising unemployment, and sector-specific employment trends. Wage growth continues, but at a subdued pace, contributing to an intricate inflationary outlook. These economic indicators, coupled with geopolitical developments and central bank activities, underscore the multifaceted nature of current global economic dynamics. Tune in next time for more updates on the My Bullions podcast.